Hi, everybody. Thank you so much for having me. I'm so excited to be here to talk about, I'm just sharing my screen here with all of you to talk all about the world of financial advisors and robo-advisors. And I'm sure, I feel like robo-advisors is one of those buzzwords of the last few years. Probably the only thing that's probably more exciting in the financial landscape is probably cryptocurrency these days. So I love to come and talk about this, and it's definitely something with clients that is it's one of the most common questions of what are they and what do they do and what are my options. So before I get all into that, I'll just do a really quick introduction of myself. I'm a Canadian CPA. I spent 20 years in corporate Canada doing all kinds of corporate finance for companies, and decided that I wanted to help make women wealthy as opposed to companies, because they can do that. There's lots of people that will help them do that. So my mission is to narrow the gender wealth gap. And just personally, I am Canadian, but I actually spend 75% of my time in Rwanda, because that's where my partner's based at the moment. So I happen to be actually in Toronto in my house right now. And so really nice to be here on Canadian soil with all of you. So let's jump into it. I know most people know what a financial advisor is, because it's kind of been the thing that we all grew up in. It was what you did. You got a financial advisor and they managed your money. They're obviously human. They look after your portfolio. And, I think one of the key differences of a financial advisor from a robo-advisor is that the financial advisors will try to attempt to beat market performance. And there's a couple of reasons for that. I would say one, because obviously they also have to get paid too. And also they want to be able to do obviously as well for their clients as they can. And what's typically behind financial advisors, if they are investing in mutual funds, is a whole lot of money managers inside of a mutual fund company. And that's exactly what they're trying to do, is use an active style of investing so that they can try to beat the market, try to find the best, companies, bond structures, investments that are going to make the most money for the unit holders, essentially. And I say may offer financial planning because I think there is some that do, and then there's a lot that they really just do your portfolio, and I'm sure you can answer general questions. But in terms of like real deep financial planning, I would say there's a proportion that will, and then a lot that won't. I like to coin this the hands-off approach. They obviously are going to give you peace of mind that they're managing your portfolio. They've got their eyes on it. I already touched on the fact that they have an active investing style. Some of them will provide other services, as I mentioned, like there could be tax planning services depending on their background. They may provide and prepare retirement plans for you. They may help you with real estate decisions. It really varies. And I think it's definitely, and I point these things out because these are the kinds of questions that I think we need to ask if we're considering going down this route, and also tuning in with ourselves of exactly what do we need from someone like this. I like to mention too, because when I get to the robo-advisor side, it's different, but sometimes there can be a barrier to entry with financial advisors, because some of them will actually have rules, I only manage money at a certain level, and you have to have a certain number of, or a certain amount of assets that I'll manage. But I also mention this because I think, advisors are paid based on the amount of money that they're managing for you. And so obviously, if you have more money, they're going to be able to spend more time with you, obviously, I would say. I would say the most common fee structure, there are different fee structures. Some of them can be paid hourly. I've never seen it, but most of them are paid a percentage based on the assets that they're managing for you. It's called assets under management. And typically, if they are mutual fund dealers exclusively, which a lot of them are, they're then paid by the mutual fund companies. And there's fees that are embedded inside of the mutual funds. And then others, if they're not buying and selling mutual funds and they're doing more active trading, they're typically paid on a transaction basis, or also just, you pay them a percentage of the assets that they manage. So let's move on. Sorry, I lost my cursor. Oh, there we go. I have too many screens open here. Okay, so the Robo-Advisor. A Robo-Advisor is an investment management platform that is built. It's essentially software, but I like to mention there are financial advisors and investment professionals that sit in this company and manage and design what the portfolios are going to look like. And then really it's just software that essentially is doing all the buying and selling every month, and also all of the rebalancing of your portfolio. So as opposed to that being more of a manual process, and this is where the robo comes in, a robo-advisor is essentially, they've created software which will automatically do that. They've automated that process essentially. I would say, and one of the other differences with robo-advisors is that robo-advisors are attempting to just give you market performance essentially. And I'll get into a little bit more detail of why that is in the next slide. And so while I like to describe the robo-advisor as kind of a no frills, they're definitely low fees, no frills, but it's interesting because I think that is really starting to evolve. I've noticed in a couple of the robo-advisors just in the last few months, they're really trying to revamp and kind of layer in some of the services that are provided by the financial advisors, like planning sessions and, calls about your investment portfolio. And I believe that this is because obviously they want to be able to absolutely be able to compete with the financial advisor. So it's interesting to be watching this evolve. So, again, leaving it to software, sort of, not really, because there are actually people that, sit behind in this company that have, designed the portfolios. And as I said, they've just automated the administration of it. Now, one of the major differences would be robo-advisors exclusively use low-cost exchange-traded funds as their investments, as opposed to mutual funds. And I don't want to get too much into, the differences between that, but a lot of financial advisors, probably the majority, use mutual funds, and the robo-advisors use exchange-traded funds. And one of the biggest differences between those two investment vehicles is that exchange-traded funds are very cheap. They're, 0.2% of a management expense ratio. Mutual fund companies in Canada average, I think it's about 2.2 to 2.5%. And the fundamental reason why that is because exchange traded funds are passively it's a passive style of investing. So they're basically going to follow, and in the ETF will actually follow one complete segment of the market. So if it's US equities, this is my favorite example, they're going to follow the S&P 500, which is an index on the US stock exchange, which is the biggest 500 companies in the US. And so they're not, whereas on the mutual fund side, they might have a US equity mutual fund, but the money managers are trying to find the winners. They're trying to say, who do we want to be invested in? We're trying to basically bring back the largest return. Whereas the ETF and the robo-advisor is, we just want to do what the market's doing. So if the market returns 10% this year, then that's what we're going to return to the investors. And that's obviously what drives the difference in costs between the two, because when you're passively managed, you don't have to have that many people looking for the winning horses, essentially. I have on here that there's no added financial planning services, but as I said, in the last even couple months, I think that is slightly starting to change with a couple of the Canadian robo-advisors. I know I've seen it inside of Wealthsimple. They're adding some new levels based on the amount of assets that you have, and they're now starting to try to bring in some personal customized planning services for people. So that'll be interesting to see how that evolves over time. The beautiful thing about the Robo-Advisor, though, is that the barriers to entry are so low. You need almost, in most cases, no minimum investment, maybe a few $100s. You can automate your contributions, and they don't have to be large. And again, I would say similar to some financial advisors, they would have a bunch of pre-packaged portfolios, and it's really all they're doing is you're going to answer all of the same questions that they have to ask you by law, which is, your time horizon, how comfortable you are with risk, what the money is for, what the goal is. And then they're essentially taking the same investments, and they're just tweaking the amounts and the values of what they're going to have you invested in. So, okay, so I've sort of already talked a little bit about the key differences, but I still want to just summarize these for you. I put a star beside less human touch on the Robo-Advisor side and more human touch on the financial advisor side. And I would say, in theory, I guess that's sort of true. But as I said, I think that is also starting to change, because on the Robo-Advisor side, they are starting to reach out and do, I think, at a certain level of assets, they will start to call you. It's happened to me personally, where they'll call and say, would you like to schedule a session so we can talk to you about your portfolio? Very similar to what a financial advisor would do. It just might not be the same person. And it's not, this person that you meet every year for 5 years, or maybe it is. And then I caveat it a little bit on the financial advisor side as well, because I think it's quite dependent on how much money you have. And so obviously, I think you're going to get a lot more attention the more money that you're paying. And so that's why I just caveat. And I think it also depends too on who you work with, and what their, value system is and how much time they have to give. Mention no financial planning services really with the Robo-Advisor. Sometimes you can get that with certain financial advisors. A lot of the financial advisors sell primarily mutual funds. They're mutual fund dealers, but there would be some that are active managers that would be in the equity markets and the bond markets and doing that kind of investing as well. So Robo-Advisor, they are, as I said, trying to achieve market performance. So whatever the market delivers in a year, that is what they are aiming to do. And they do that, and that's why they can keep the fees so low, because they're using a passive investing style. Whereas the financial advisors are trying to beat the market, but nobody can beat the market consistently, just, to set expectations a little bit. I've talked about the fees already, and I've talked about the barriers to entry. So let's continue on. So I always do think it's important just to talk about fees, because I think that it is one of the biggest things, like differences between, and it's really, I think, probably what brought the Robo-Advisor in, that and the, technology just continuing to move so quickly. But I think it was, Robo-Advisors came to be back in the 2010 recession, and it was probably like, we need another option, and a low cost option. And it probably is the most significant difference between a financial advisor and a Robo-Advisor. And so in this very simple example, and it's just to illustrate the point of over time, how important fees can be, or just how significant they can be. If you have $100,000 investment and you just put it there, you didn't add anything more to it for 30 years, and we assume about a 7% market performance year over year, if you had 2.5% fees that you'd be paying to a financial advisor, that amount of money would be $375,000. And then if your fees have been reduced by 2% and you're paying about 0.5%, then that's $661,000. So it really can add up over time, fees. Okay, and let's move along here. Okay, so what are the things that you need to consider when you're making this decision? And I've put a whole bunch of questions here, because really, ultimately, these are the things that you need to ask yourself. And so the first one, how much do I have to invest? And obviously at a point in time, the whole point of everyone going on a wealth journey is that that's going to change over time and grow, and especially when we're being consistent with our investments. But I mention it because I really feel that it is the most important, the getting to $100,000 of wealth is, it's so important to get there as fast as you can, because it just gets easier after that. And so in my opinion, one of the ways that you can, get there faster is obviously to keep your fees low. And as I've mentioned before, a lot of financial advisors, if you don't have a somewhat significant portfolio, you just have to consider how much value you're going to get. And so this is one way. And it's not to say our investment strategy and how we invest our money will evolve over our lives. And so that doesn't mean that, we're never going to use a financial advisor, or we're never going to use a robo-advisor. It just might be in the early years. I always say the robo-advisor is a perfect thing when you're starting out, because you don't have to have that much money. The fees are low, and it's easier then to accumulate money quickly, wealth quickly. So, and the second one, will you sleep at night? Obviously, this is a comfort level. I think as people get more empowered, they get just more comfortable and confident with their investing in general. So that will also evolve. But ultimately you have to be comfortable that, things are being managed. So if you are confident and comfortable and you understand, then, you might feel, I don't necessarily need as much human touch, and I'm comfortable with a robo-advisor. But if you're not, and you're going to be nervous all the time, and, then it's probably worth it for you to pay that extra money and be able to know that there's a person that's on the other end of the line, or a phone that, can speak to you at any time about your portfolio. Obviously, I've talked about fees, and fees being the single most important difference. I would just say this is the biggest difference between the two, that and some service things in some cases. And so you just have to understand how important are they to you? How fee sensitive are you? So my fourth bullet, you are not special. Everyone is special, just to be clear. But I believe, though, as investors, we aren't that special. There are, a percentage of people, of outliers always, that have complex situations. But I would say there's a large majority of people that all fall into a bunch of different buckets. And so, and that's what I believe. And so depending on, the robo-advisor is, while it's doing it in a slightly different way than a financial advisor, they're both doing the same thing for you, just in a slightly different way. And I really believe that people think when they go and they work with a financial advisor, it's like their portfolio is going to be totally different from someone else. And it might be, but there's going to be probably a whole, a financial advisor doesn't have 250 portfolios that are all different. There's probably a whole bunch of people that sit in one category that are all of similar risk tolerance and similar age. And they probably then have a pretty similar portfolio, just different amounts of money and things like that. So that, I just like to mention that because I think it's an important consideration. And then the last thing I would say too is that there's points in time in our life when we need financial planning, when we need someone to help us put together a full plan. And then we need to revisit it again because things have changed, or, we're looking now at early retirement strategies, or adding another property, and what would that look like? And, different insurance potentially at different points in our life. But we don't necessarily need financial planning, ongoing financial planning all the time once we have a financial plan. And so I think people fall into, well, I have to get a financial advisor because I need financial planning. And it's like, well, sure, you do need financial planning at some point in your life. But there's also other ways that you can get it. There are certified financial planners. A lot of them, some of them manage portfolios and some of them don't. They just do fee only work where they will work with you to build financial plans. as well as give you unbiased advice. And they basically give you a portfolio audit where they'll look at your whole portfolio and they'll give you observations and tell you what they see and give you suggestions. And so my point is that there's lots of ways, other ways to get financial planning services if at each time and when you need those. And that's it. This is how you can find me. If there are any questions, did I go too fast? No, I did pretty good, 18 minutes. So I would love to open it up if anyone has any questions. I'm just nothing here in the box, but I just will ask. Okay, sorry, I'm seeing some questions. Do we know they're generating market returns? Oh, interesting. How do we know they're generating market returns? Well, yeah, that's a good question. Yeah, I mean, how do we know they're generating market returns? I mean, I guess you'd have to go and do research to look against benchmarks, see how each individual ETF is doing compared to, if you're invested in a US equity ETF, go and see, well, how did the S&P 500 do this past year? I suppose it would be a little bit of work. I don't know. I haven't looked into each and every one of them. I think some of the best investments in general, whether it's a mutual fund or it's an ETF or whatever, will talk directly about on their fund fact sheet. They'll talk about, what, here's how we've done to the benchmark. But I do notice when I read a lot of those, some will do that and some do not. So anything else for anyone before I close? No. Okay, thank you so much to everyone for being here, and thank you for having me. It's been a real pleasure to be here and to share with everyone.
Thank you so